Of course, we had the Dow Jones briefly touching that key 12,000 level, a level that we haven't seen since July 2008. A bit of stalling coming to the fore after S&P downgraded Japan's credit rating. How is this going to impact trade going forward?
Correct, Eleni. We saw, or rather we have seen US markets trading higher on corporate earnings, really carrying those markets. We're seeing a bit of a pullback. We saw the S&P future coming off lower after a positive start today. The market really is very quiet this morning in terms, we're seeing just over 3 billion traded so far. With expectations, market investors really looking forward. We've got 60 stocks reporting on the S&P through the day into the afternoon, and markets are really looking forward to that. We also have some durable goods numbers and some continuing jobs claims out a little bit later, so the market really waiting to see what the impact is from those numbers.
Let's touch on some trading updates out in South Africa today. JD Group and perhaps out with some numbers that really surprised many investors out there, showing good growth over the last 4 months, ended mid-January. We're seeing consolidated sales increasing by 11.5%. We had merchandise sales in the furniture retail division increasing by just over 25%. JD Group, as you can see, up 2.5% in today's session so far. So clearly great news for the company.
Correctly, and we also saw Lewis coming out a little bit earlier last week, and we saw them coming through in terms of their sales. So that trend is still continuing. They have perhaps opened the taps on credit, and that's really helping their traditional sales numbers that are coming way above market expectations. And above it, they are coming off a very low base. Very good results. Bad debts are lower. They obviously, in terms of results, you see, haven't done so well out of Poland due to weather and economic activity out from Poland. We are looking at revising our earnings forecast for the company. We still, however, are concerned about Walmart coming into that space, putting pressure, which will put pressure on the company going forward into 2011. And also in terms of the amount of sales, the credit sales, how much of those sales are going to turn into possibly higher bad debt towards the end of the year. We're fairly cautious. We prefer Lewis in this sector, but a fair set of results out of JD Group. We're going to have to see if they can maintain that through the year.
Well, Yolanda, in other words, you're relatively cautious on the likes of JD Group, and you wouldn't be accumulating the stock at this point.
It's at fairly high levels. It has performed well off a very low base, so we advise investors to be cautious, possibly take some profit off the table if you have bought it at lower levels. But to climb into the stock at this particular point would be cautious.
Let's look at CSE shopping centres, capital shopping centres, and it seems that shareholders have approved the deal to buy the Trafford Centre. We also know that Simon Property Group involved in this story as well. It's been quite an interesting story to follow over the last while, and it seems that there's still a lot of concern externally that perhaps the financial deal that is going to go through going forward could actually hamper capital shopping centres. Is this your view, or do you think it's going to be net positive?
Correct, Eleni. It is part of their strategy, how they're going to gain earnings out of Trafford. In terms of market, we saw it has been pretty much the story has been in the market. We've seen the share price come off. It is trading at its previous support at 42.48. Investors should remain cautious at these current levels. We expect it to be upside, but if it does break through this level at 42.48, we could see some reasonable downside to the share price. But if it turns at this price, we could see some nice upside to it.
Yolanda, we had Lonmin out with first quarter platinum sales numbers saying that it dropped by 39.1% to just over 66,000 tonnes compared to the prior year. And we know this was due to some rebuilding and modifications of its furnaces. And also looking at Impala Platinum, and this company says that half-year headline earnings per share are going to be between 329 and 350 cents higher. And it seems that mostly we've been seeing some positive news coming through for the platinum miners.
Correct, Eleni. We've seen a nice run in the platinum price. We've seen, however, in terms of Impala, that the share price has really come under pressure since the 17th and the 18th of Jan, where we saw the CFO resigning with immediate effect, and then we saw some broker downgrades coming through for Impala Platinum. It's obviously positive for them that they're seeing a higher, an increase between 55 and 65% in terms of earning increase. However, the production cutback is also quite negative for them. In terms of the platinum sector, we'll have to see. Our mining companies are really struggling to get benefit in terms of the commodity or the higher commodity prices. So we're going to have to see. But the share price has been under pressure for the last couple of days, and we expect the share price to continue to see further pressure.